Trump's back, and so are his tariffs. This time he's going bigger than ever, with global tariffs hitting China, Europe, and even the Gulf countries such as UAE. The big question is, what does this mean for us here in the UAE? And more specifically, will Dubai's real estate market feel the shockwaves? In today's urgent video, I'll break down all the latest news, explain the economic ripple effects, and explore how all of this could impact property prices, foreign investment, mortgage rates, and more here in the Emirates. So drop a thumbs up, subscribe, and let's begin with this video. On Wednesday, Donald Trump announced 10% baseline tariffs on all imports to the US and higher duties to some other countries.
Starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that. We used to think about it a lot. We didn't think about it for many decades, and you see what's happened.
These include duties to the Gulf countries and specifically 10% to the UAE and Saudi Arabia and 20% on Jordan as reported by Khaleej Times. There were much higher reciprocal tariffs on direct competitors to the US such as China, hit with 34% and EU with 20% respectively. Trump's tougher than expected tariffs are expected to stroke a trade war with many countries threatening to impose retaliatory measures, while the dollar slumped as investors were worried about an upcoming recession. While the UAE doesn't rely heavily on exports to the US, these tariffs are expected to shake the global trade flows, increase costs, and trigger economic uncertainty worldwide. Now, let's dive into the macro impact on the UAE economy and see what happens when the world's biggest economy tightens the trade grip. First, there could be oil price volatility. As if tariffs lead to slower global trade, then there might be a decrease in the oil demand. Thus, lower oil prices equal lower liquidity for the Gulf. That could mean less local spending, also including in the construction and real estate sector. Secondly, there is investor caution. Global economic instability makes investors nervous, and while this wasn't really the case for the UAE, they might change their mind now. Many investors tend to hold cash, delay their decisions, or wait for corrections and distress deals. In Dubai specifically, that might mean lower transaction levels, especially in the high-end segments. However, on the other side, that could also mean that those individuals that are now afraid of this volatility worldwide might look at Dubai more seriously and take these opportunities in Dubai way more seriously and actually want to invest here in order to avoid any kind of instability in some of the other Western parts of the world. This also happened when the Russia-Ukraine war started, and so many of those individuals that were affected or actually were just involved in trade with those countries moved to Dubai and considered making Dubai their base or even making UAE their base country. And the third, there could be also currency dynamics. Tariff tensions could, of course, weaken the US dollar, which is pegged to the UAE dirham. But this could be actually good news for some because a weaker dollar would make the property prices in the UAE for those who are actually trading not in dollars much cheaper. For example, for Europeans, Asian markets, and Russia, which is not only a plus for the investors who were considering already Dubai and now are becoming more serious to invest in here, but also there could be a big plus for the local market, even with the small rise in the prices. Now, let's break it down into segments and see what is the direct impact in the real estate sector here in the UAE. First of all, construction costs may continue to rise. Tariffs on Chinese goods will, of course, mean more expensive products and imports for all these Chinese-produced goods worldwide, and that includes UAE. Developers might face increasing costs in the aluminum space, steel, glass, or any kind of other finishing materials. And the result, the higher development costs, will be, of course, passed down to the buyers. So eventually, we might expect some increases in the prices for these properties. Number two is the pressure on the financing and the mortgage sector. If inflation spikes globally due to this US tariffs, then the interest rates might rise as well. And in the case of UAE, banks here often mirror the US US currency rate increases and decreases, all these fluctuations due to the dollar and dirham being pegged. Higher mortgage rates equal less borrowing power, especially for the first-time buyers. Number 3 is that the off-land projects could also face the heat. Developers here are already battling the high increase in the construction costs, material inflation, and the high competition. If investor sentiment dips or the financing slows down, off-plan sales may also result in a slowdown. This could impact the launch schedules, price strategies, or even lead to more attractive payment plans, which is a good news for us investors. That's why, while we might see an increase in the prices of the property just because the materials and the steel, aluminum, everything is gonna be a bit more expensive due to the other countries being attacked by this tariffs, on the other side, buying property might actually become more affordable and easier to do for first-time buyers in specific, and for anyone who wants to just build their portfolios on more attractive payment plans with less payments required every few months and maybe even more delayed payment plans. Lastly, the foreign buyer behavior may also change. Europeans may pull back due to economic strains. However, on the other side, Asian countries and Russia may see Dubai as an even better safe haven from local volatile markets. As we've seen in the past, the UAE's economy and market becomes more attractive to anyone during this kind of global shakeups. Specifically, the tax-free environment in the real estate sector, where there is no tax on capital gains, on rental income, and so forth. However, while I said that Europe may not really look at Dubai to invest, there could be other scenarios as well. We've seen that so many British investors are relocating to Dubai or buying here, and that could still continue. Thus, investors in countries impacted by those tax tariffs may actually look at better jurisdictions such as Dubai and the UAE overall to a better option. In that case, there might actually be still some increase in the mid-tier and the more luxury market, because there might be investors just moving here completely or relocated for some short period of time, and they would actually want to move their families. So there might be more demand for these bigger and more expensive units. In terms of labor and logistics, there might be some disruptions because of all these delays in the supply chain, shipping cost increases, and just supplier shortages. This may affect, of course, the delivery dates on the off-plan projects, and that would definitely have a big impact on the investor confidence in the off-plan projects, and of course their ultimate exit strategy, which is the resale timeline that they need to look at when investing in those projects. On the commercial side, the businesses that are impacted by these tariffs globally may actually slow down their expansions worldwide, and that also includes the UAE. However, again, in any kind of economic analysis, there is a flip side. So when we look at the Dubai's free zones, there are so many companies who were probably impacted by these tariffs and would actually look at these free zones as the best place where they could shift their operations towards to avoid this kind of tariffs that were imposed on them and to simply bypass trade issues elsewhere. However, as we saw in the past, for UAE specifically, it's not all about the doom and gloom. With disruption, especially global disruption that doesn't really impact the Gulf countries, the GCC, and specifically Dubai and Abu Dhabi as the primary cities here, big opportunities may come up for us. First of all, long-term investors could benefit substantially from this. As uncertainty increases, the prices of properties here may correct for some time or may just stay stable. That's why savvy buyers and us investors here we could enter at a better price point. Secondly, there is foreign exchange arbitrage. Investors in countries with stronger currencies versus the United States dollar could take advantage of better deals in the Dubai property market, as the property for them will become slightly more accessible and actually cheaper, since the dollar might be heavily impacted by these tariffs and just go down. And finally, there might be a shift towards the income producing assets, which in our case, these are the rental properties and not the off-plan. Investors may prioritize the rental properties with stable income yield over all the speculative off-plan units that might actually even increase more in the prices due to all these tariffs. So what should investors like us do right now? First of all, you need to focus on ready and stable, well-located properties that are generating good cash flow. Avoid the overcommitment to the off-plan units unless the developer is super solid and the payment plan is very accessible and you can actually pay it back. Hedge the currency risk if you are buying from countries with high risk on the currency volatility. Most importantly, stay informed and don't panic sell. Dubai's real estate is very attractive long-term, and even if there might be some corrections, this is just the sales time for you and you need to invest more. So exactly the same as in the stock market, when you see a smaller dip here is just the buy time. And for me personally, this is just a good sales season. Again, I'm not saying that this will happen. This is just one of the options. I personally believe that it would be stable and just continue to increase due to more people wanting to actually reconsider UAE and Dubai as their safest place, specifically now with all these tariffs being imposed on everyone. And the UAE has just 10%. So it's actually the lowest. And that's why I don't really see a very big impact, as the UAE also doesn't really depend on the products from the US. And if all of this feels overwhelming and you still don't know how to position yourself in today's shifting market, this is exactly why I offer one-to-one coaching sessions and strategy calls. While in this specific episode, I might have said a few things that could have triggered you or could have interested you, there are many other implications, and there are so different implications on every single case in specific. Whether you are from a country where the currency is very volatile and you want to move here, whether your business was impacted back home and now you are thinking to actually relocate or create a free zone company or simply invest through real estate and get your investor visa. Everyone's case is different and very specific. That's why I would tailor these courses and the calls that we would have specifically on your case and advise you on the best possible options that you personally have, and then you will decide what to do next. So check the link in the description to book your spot. I only take as much as my personal time allows, so actually this month is full. Next month I only have one spot left, so don't hesitate. Reach out right now and let's get you ready for property investing in the UAE. Trump's tariff moves may be aimed at America, but this will certainly impact all of us. Dubai's real estate market, like any other smart investment sector, is all about understanding the macro picture, adapting, and staying ahead. So while it feels uncertain and you might not know what will happen in the future, we don't know it either. I personally think this is not a big deal for the UAE market, and we could see actually steady growth in the future. If you found this breakdown helpful, hit that thumbs up button, subscribe for more insights and latest news on real estate here in the UAE, and drop your comments below. Let's have a meaningful discussion. And with that, I will see you in the next one.